Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, February 17th, 2011. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London, 12:30 in Bermuda, and in Mexico City, 10:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. We have a bit of breaking news. Michael Moriarty, the Deputy Superintendent at the New York Insurance Department, will be leaving the department in early March and heading to the New York law firm of Strook, Levin. That firm is actually one of their senior partners is, I believe, Don Gabin, who is a former New York Department regulator, and Michael will be Don Gabay, and Michael will be joining Mr. Gabay and Vinnie Lorenzano, also a former Deputy Superintendent in New York Department. We're going to miss Moriarty. He's a true servant of the citizens of New York. He's done an excellent job. He's very well respected in the industry, and he's a good friend of ours, and he has been for 17 or so years. So we wish him well, and we'll certainly keep in touch with him. And now that he presumably is going to be a little less busy and perhaps less restricted in what he can say, we'll probably be interviewing him more frequently. He was the first interview we ever had quite some time ago. Good luck to Michael Moriarty. Now to our main news. Swiss Re has come out with some numbers. They say that they had a very successful January renewal. It said that while average reinsurance prices dipped by 4 to 7%, they were able to outperform the market based on their disciplined underwriting and success on non-commodity placements. The 14% increase in treaty business contrasted to a decision last year to walk away from a significant amount of business. The increase was driven by an increased demand for tailored solutions from large clients. There was a 7% rise from renewal business, plus 32% of new business, and 27% cancellation. Swiss Re is assuming a combined ratio of 94% this year, although this assumes a normal large loss burden. The company's already estimated losses of about $325 million from the cats in Australia in January, but there's been no early year event to match the impact of Storm Xynthia or the Chilean earthquake. Let's keep our fingers crossed and hope for their case that there won't be. AXA UK and Ireland made an underlying profit of £131 million for 2010, down 44% from the £235 million in 2009. AXA Ireland and UK combined operating ratio came in at 105.3%. The UK winter freeze cost AXA £118 million. That added 3.3 points to the operating ratio alone. Excluding the impact of the freeze, operating ratio would have been 102%. Listen to this. Their group chief executive, Paul Evans, said, an improvement on 2009, the current year operating ratio of 105.3% was nevertheless disappointing, reflecting the 3.3 points of exceptional winter freeze claims. According to AXA's group results, UK and Ireland non-life net income for 2010 was £32 million, down about 27% on 2009's £44 million. Catlin US has promoted Steve Ensign to director of the direct property facultative department within the company's reinsurance operations. Catlin's reinsurance division is based in Hartford, Connecticut. Ensign first joined Catlin back in 1999. He replaces Rick Watson, who's been moved into a new technical role as a referral underwriter. Ensign is going to be able to write cover on 4 different types of paper, the 2 of Catlin Insurance Company and Catlin Specialty Insurance, both of which are in the U.S., as well as Catlin Insurance Company UK and the company's Lloyd's Syndicate 2003, which is also in the UK. This group of 4 will shortly be joined by Catlin Indemnity Company, which is scheduled to start writing business next month. Here's an interesting story. Aon International Energy Incorporated, which is a subsidiary of Aon, has entered into a $36,000 settlement with the Office of Foreign Assets Control, that's a U.S. government entity, after allegations that the broker violated the Iranian transaction regulations. Aon Energy served as a broker on behalf of a European reinsurer and placed facultative retrocession reinsurance with 2 European retrocessionaires. The U.S. government alleged that Aon Energy facilitated the placement of coverage and payment of premiums for facultative retrocession reinsurance, which reinsured construction risks associated with petrochemical projects on Karg Island in Iran. The government considered the transactions at issue to be particularly harmful to the sanctions programs, and Aon Energy's actions were reckless in connection with the policies issued. However, Aon Energy's willingness to strengthen its compliance program and procedures, as well as its commitment to cooperate with the government, appeared to mitigate the severity of the penalty. This is the first public announcement of an enforcement action involving the reinsurance sector. Well, Australia just can't get a break. Just 2 weeks after tropical cyclone Yasi caused destruction to parts of Australia, another big storm is hitting the north part of the country. Tropical cyclone Carlos dumped a total of 340 millimeters of rain on the city of Darwin over a 24-hour period. This is an all-time record for Darwin. It eclipses anything that Yasi ever produced over any town in a single day. In fact, Darwin has now had 470 millimeters of rain over a 48-hour period, and there's more coming. Carlos is moving very slowly, and that's why such huge rainfall totals over one particular area are occurring. In the case of Yasi, the wind was as much of a damaging factor as the rain. Cyclone Carlos has some wind. It's uprooted trees and downed power lines. The storm has been classified as a Category 1 and may well intensify into a Category 2 over the next 24 to 36 hours. We'll go to a break and listen to a word from our sponsors and come back with the rest of the news. We'll go through our daily uprising report. Bahrain's capital is in a state of lockdown. Tanks have appeared at intersections. Riot police ended up swinging clubs and firing tear gas, smashing into a group of demonstrators who were occupying a roundabout near the Capitol building. 4 people apparently were killed. The military announced on state TV that it had key parts of the Capitol under its control and that gatherings were banned. Bahrain is actually important to the United States for a number of reasons, not the least of which is that it hosts the U.S. Navy's 5th Fleet, which is a critical counterbalance in the Persian Gulf to Iran's influence. Meanwhile, further to the west, in Libya, a day of rage is occurring today. Thousands of protesters are on the streets burning pictures of Colonel Muammar Gaddafi. Last night, Gaddafi was quoted as saying that all of the uprisings occurring across the Arab world are reactions against the American regime. I don't know how that quite fits with the actions in Tripoli. In Vietnam, an anchored tour boat packed with sleeping tourists sank early today, killing 12 people. It occurred in Vietnam's scenic Ha Long Bay. 12 people were drowned from 9 countries, the deadliest tour boat accident since the country opened to foreign visitors. Vacationers from the U.S., Britain, Australia, Japan, Russia, France, Sweden, and Switzerland have been confirmed dead. Hong Lei Bay is one of the country's top tourist attractions, drawing more than 5 million visitors a year. And in Africa, in Tanzania, a military ammunition depot in the country's largest city blew up overnight in a series of explosions that leveled homes and schools and killed at least 20 people and injured 150 others. Thousands of people ran for their lives from the blasts that were felt as far as 15 miles away. The Prime Minister said that several houses and a school were leveled during last night's explosions. Debris showered over parts of Dar es Salaam, 10 miles from the military base. The name of the base is Gongola Maboto. That's where the depot is located. It's the second such ammunition depot explosion at a military base in Dar es Salaam in the past 2 years. Well, we always like it when Ed Kelly speaks. He's one of the guys who shoots straight in the industry. He's the CEO of Liberty Mutual. He says that Liberty Mutual is seeing indications that commercial insurance clients are beginning to need more coverage. This is a hopeful sign. But Kelly said that any hope for improved demand is undercut as insurers continue to cut prices to levels that seem to guarantee that the policies are going to lose money. Liberty joins Travelers and other insurers in citing signs that businesses are growing more optimistic in how much insurance they're going to need ahead. He said the stabilization follows a 2-year decline in demand. While demand has been falling, the supply of capital available seems to be increasing, and the imbalance exacerbated earlier declines in insurance prices. People in the industry have been warning recently that policies may prove to be unprofitable in future years. Kelly is one of the loudest in warning of the underpricing. He's also one of the people who lit out after AIG a year or so ago, claiming that they were undercutting competitors using U.S. taxpayer dollars. In a call yesterday with analysts, Kelly said, "Any optimism we might have is tempered by competitors' pricing behavior. If you sell more exposure at bad rates, you just lose more money." He went on to say competitors have been mentioning positive changes in exposure, but we're much more concerned about price levels. Stocks of insurers are unlikely to turn around until the price of coverage turns around, he notes. Some commercial companies, such as ACE, CNA, and others, are currently trading below their book values. That's why Liberty Mutual, he said, which had plans to offer an IPO last year for part of the company, shelved them. He said, "We continue to be ready to do that. It's highly unlikely it's going to occur any time in the near term because insurance stocks won't be trading at anything like appropriate value." And he said, "Until there's some common sense in pricing, we don't think any insurance stocks will be fairly valued." But he noted one reason to be hopeful. He said that some commercial clients are pushing for policies to last longer than 1 year. So Kelly said that customers applying pressure to commit to multi-year deals would indicate that they expect prices to start moving upwards. Interesting point of view. It's, the price of a product is low, you would want to lock in because naturally you fear that it would go up. Interesting. Maybe someday we'll talk to Mr. Kelly if he's interested in talking to us. It would be very good to have his take on things. That's all the news that we have for today. If we have any breaking news, we'll come back and tell you. In the meantime, thank you for watching, and we'll see you tomorrow.